later on in retirement, he said publicly that he regrets now, and he looks back and he said he was wrong, that the idea of simply throwing the keys of the castle to Wall Street, letting them do whatever they wanted to do was incorrect. But at the time, remember, Alan Greenspan was doing ads for Apple Computer, and he was a media figure.
Yes.
And so he was very egocentrically driven to have the attention drawn to him. He was not like Paul Volcker, who preceded him, who took rates up to 16 to 17% to wipe out the inflation that was the result of the Vietnam War and all the profligate spending in the U.S. So he became a celebrity. And this was the first time really you had financiers become celebrities. Flash forward to Ben Bernanke and Hank Paulson and the financial crisis, where they're on the cover of Time magazine as saving the world and the 2008 crisis with Timothy Geithner was atrocious chapter in American financial history, where laws were broken and rewritten on the fly, where Hank Paulson put a gun to Congress' head and said, give us $780 billion right now, or we're going to crash the market. And the next day, the markets did start to crash, and then Congress said, oh, sorry, yeah, we'll give you your money. So they hold the Congress hostage because they can manipulate prices. It's very, very easy. My experience on Wall Street, I can tell you, and having invented a technology, the virtual specialist technology, which is patent number 5950176, it's a way to make virtual markets. And I can tell you, and it was bought by Cantor Fitzgerald in 2001. And I can tell you technologically how to manipulate markets using algorithms quite easily to create the prices you want. The markets today, Tucker, are not the result of buyers and sellers coming together and creating a market price.
That's what we imagine.
It's the result of, let's say, a Goldman Sachs saying, we want the price to be X, so we're going to fill the trades in to get to X. So they determine the prices in advance that they want to see.
Well, that's not a real market.
No, it's a command and control system. It's central planning. It's not capitalism at all. Don't blame capitalism for the ills of the American economy, because we don't live in a capitalist society. We live in a command and control society where the fundamental element of the economy, money, the price of that money is set by the Central Committee, the Politburo, known as the FOMC. That's not a market-driven economy. So that's problem number one. Bitcoin solves this because Bitcoin is not controlled by anyone. It is pure market-driven. And the price of Bitcoin, the value of Bitcoin is dictated purely by people's willingness to have or need to have an unconfiscatable, uncensorable way to own property outside of what they see as a very big corrupt system. Now, you had Michael Saylor on your show who did a very great explanation about how Bitcoin beats inflation. You know, what I would add to it is that Bitcoin beats the kleptocracy. Bitcoin beats the inherent fraud and the problems in the U.S. economy as it has now descended into what would almost be argued a permanent state of dysfunction by a captured regulators, venal, ineffective politicians, and a media, present company excluded, but a media that's also in their pocket as well. So we have really a crisis. So, and not only that, but it's openly telegraphing to the financial community the frauds that they're conducting, how the frauds are doing, and how you can participate in those frauds. Like the Financial Times is essentially a Bible on committing financial fraud. The Wall Street Journal is essentially the playbook on how to commit financial fraud. The typical financial media at CNBC really talk about fraud. There's nothing inherently with any integrity whatsoever in these financial markets. But to your point, with the coverage of Sam Bankman-Fried, here you have a situation where this is, by the way, Sam, his company FTX was launched the same day as Biden launched his presidential campaign. I don't know if you know that, but it was a bit of a coincidence there. As I explained a little bit earlier, so let's dig into this. After Bitcoin was created, a lot of people decided that they could come up with digital currencies that were going to be that could be used as scams. Essentially, it was very easy to create play money, and I did this myself, as I mentioned, in the 1990s when I did the Hollywood Stock Exchange. I created a virtual currency as part of that game. So I know this market very, very well. And so I can tell you intimately, in detail, from a technological point of view, the ins and outs of these frauds that are being perpetrated. And these tokens that are being created in the trillions, they have their purpose is solely to be picked up by this cartel, if you will, of VCs out in California. Sequoia, you mentioned, is part of it, and others who are involved in a collusion in racketeering. This is the thing about it, Tucker, is that they're involved in a clear-cut case of criminal enterprise. It's a criminal enterprise. It's a racket. They need to be going after with RICO. The Andreessen Horowitz, Sam Bankman-Fried, Sequoia, BlackRock, they're involved in a criminal enterprise and a racket by boosting the price of worthless tokens on each other's exchanges and then using that token as collateral to fund things like, oh, the war machine in Ukraine. Oh, Joe Biden's re-election campaign. Oh, the midterms, which we now know was highly influenced by money that was manufactured out of thin air. They can't get the money from Congress. They can't get the money from their donors. So they created this entity called FTX, which is a huge slush fund. Essentially, it's a slush fund disguised as a crypto exchange, which is managed by somebody. The way I see Sam Bankman-Fried, he's kind of a cross between Bernie Madoff and Charles Manson. Right? Because he's got his little cadre of drug-addled sex maniacs in the Bahamas, and he's perpetrating the biggest Ponzi scheme in history. So imagine that, the mix of Charles Manson and Bernie Madoff, and you end up with this freaky, fuzzy-haired, larcenistic criminal who's down there perpetrating the biggest fraud in history, and they're the Democrats are like, yeah, I'll take your money because we're morally in need. It doesn't matter if the money is stolen. Our moral agenda means that we can take stolen money because that's the way we are. We need to fight over there in Ukraine. We need to make all the, the moral turpitude of the Democrats is insanely over the top. So, but they've run out of money. So they had to resort to this, essentially this racket. And the racket, you can go back and you can trace the origins of it to the past few decades where we've had very similar instances of financial fraud and abuse. The 2008 crisis I mentioned, the S&L crisis, long-term capital management, if you remember that, the late 90s, they were engaged in a massive scheme, really, Ponzi scheme that blew up, and they were bailed out by the Fed. The hope is always that the Fed will bail you out. The hope is always that the financiers will bail you out, that there will be no accountability. And the question is, well, why wouldn't they have that assumption? Because when in the last 40 years have these financiers not gotten bailed out? When has any of them gone to jail? Okay, Bernie Madoff, he went to jail. But we're talking about literally thousands of people who, if they were properly prosecuted, would be in jail, as William K. Black did in the early 1980s against the S&L crisis. It might be before your time, but remember the Keating Five, Charles Keating. Yes, of course. All those people were engaged in the essentially mismarketing certificates of deposits at savings banks and then using that as collateral to go buy yachts and property. And it was a very similar scam, but a rudimentary version of it. So all we've seen in the last 40 years is it getting worse and worse. The remedy for the 2008 crisis was not to try to put the bad guys in jail. What Bernanke did was they gave them a credit card 10 times bigger and said, just do the exact same thing. Obama, same thing. They said, we're not going to put you in jail. Obama said, don't focus on the past. Don't focus on the past. We're going to look to the future. So we're going to give the guys who committed these crimes 10 times to 20 times the credit, and they're going to do exactly the same thing. Now, at that time, we said, within 10 to 12 years, the exact same thing is going to happen, but 10 times worse. And that's where we're at today. We were off by 2 years. 14 years later, it's the global financial crisis part 2. And it's because of the exact same things happening all over again. I wrote, remember collateralized mortgage-backed securities?
Very well, okay. Yes.
There's a new product just this past week. It's called private equity-backed securities. So they're taking worthless private equity, they're wrapping it in a new
I'm adding that to the list of things I'm not investing in.
No, but they've already sold, $500 million to $1 billion of it. Because...
What is it?
It's a private equity-backed note where they're taking the stubs from busted private equity deals that are completely illiquid. And that's what I said. If you read the Wall Street Journal, it's like you're reading a how-to book on how to commit fraud. Here it is. illiquid private equity stakes bundled into a security known as a collateralized fund obligation with a high credit rating, of course, because they put a little treasury in there to give it a, it's like reverse drug dealing. You know, you put in a treasury bill to make your garbage seem higher. It's called a CFO, collateralized debt obligations. And so they've already sold billions of these.
Who would buy something like that?
Pension accounts. Because pension accounts are, in our country, the people who run them are picked by Wall Street, and they pick stupid people on purpose. I'm now, when I was on Wall Street, this is truth. If I had a trade, let's say I had a trade that I made, and I had like a $500,000 or $1 million error on that trade. You stick it in the error account for the firm. There's no account number, so you don't really recognize it as existing. But you know on the books of the firm, there's a big error. Then a week later, you're talking to the teacher's pension account or the fireman's pension account. It's a huge pool of money. It's run by an idiot. And you say, okay, it's time to top up the pension account. We're dumping a bundle of securities into the pension account. Into that bundle goes that bad trade. It's a loss, but they just bundle it in, and they make it disappear. And the pension accounts are always underperforming the market because Wall Street uses pension accounts as a toxic waste dump.